Last Monday, in the wake of the drone attack on Saudi Arabia's oil infrastructure, the price of Brent crude spiked from 60 to 69. Not a huge move when you consider that 5% of the world's oil supply was wiped out, at least for the moment. Then over the next couple of days, the price of crude came right back down. It's not back at $64, like nothing happened. In the past, this kind of oil shock would have been devastating. Remember, it's not just the drone attacks. We've seen tanker sabotage in the Straits of Hormuz, attacks on Saudi pipelines, and now we're hearing muttering about the possibility of war with Iran. Yet oil hasn't been able to make a sustained rally, in part because the United States has leapfrogged Saudi Arabia to become the world's largest producer. Frankly, this story is so big that I don't think I can do it justice on my own. That's why I want to dig deeper on this story with Rusty Braziel. He's the president and principal energy markets consultant for RBN Energy and RBNenergy.com, because I think he's maybe the best, no, he is the best analyst of the oil and gas industry on earth. Rusty, welcome back to Mad Money. Good to see you, sir.
Thank you, Jay.
Have a seat.
Good to be here.
All right, Rusty, Rusty knows I go to him about 5:30 in the morning, almost every day, to say, what the heck? And I came to you with a big what the heck after oil did not go up appreciably after the attacks. Can you explain to people what you told me?
Yeah, basically three things going on. First of all, we've got 6 million barrels a day of production that we didn't have the last time this occurred. So 2011, the whole Libya thing happened. We had a withdrawal from the Strategic Petroleum Reserve. And this is the first time it's really a big deal happened since then. We've got 6 million barrels a day more production, and that means that we're just insulated from this sort of thing. But the Saudis have helped too. The Saudis have basically integrated downstream, a lot more refineries, a lot more petrochemical plants, more storage, and that means they're more resilient. So when this happened, they could react to it and basically keep the damage under control. And then there's the global market. Global market is simply tamped down right now. Growth is not what it used to be. We've got a trade war going on, and there's a lot of surplus storage in the market right now. After all, I mean, OPEC actually had production cut back to support prices before this happened, right? So you put all that together, and it was just not going to hang up there the way a lot of people thought.
Years ago, I went through the Permian, went to go see where James Dean made the movie Giant. And there was just lots of idle oil rigs, and a lot of people were talking about the Depression, never going to come back. If I go there now, it's insane.
It's crazy.
What the heck happened?
Well, shale happened. So we came up with, the United States came up with a new way of producing oil out of formations that simply was not available before. That's a technology thing. That's happened over the last 10 years. And because of that, we can now produce oil, gas, and NGLs at rate or unit cost far below what we could do before. And you put that together, and that's where all the production is coming from.
Scott Sheffield talking about 18 million barrels. I mean, where the hell are we going to put all that oil?
Well,
CEO of Pine.
We'll put the oil overseas, but the 18 million, I think Scott's backed off a little bit of the past couple of days, but not by much. If we do several different scenarios every 2 or 3 months, and our scenario that we've got right now says that if crude oil prices hang in there for the next 5 years at about $55, we'll get up to around 15.5. But if crude oil prices, for whatever reason, get to $65, the economics are so much better for producers that they will be able to make more money and therefore drill more wells, and production is probably actually going to exceed Scott's 18.
Well, I mean, look, no one knows where to put this stuff. And you often talk about natural gas. We are the lowest cost natural gas in the world. Yep. We are, but we're not flooding the world with it because it takes too long to build all these things. But how about all these different, if I went down to, let's say, the Louisiana area, we've got Sharif Souki back in action, Freeport. I mean, how much are we going to be able to export?
We're going to be able to export 12, 13 BCF a day sometime over the next few years, 2 or 3 years. Right. So it's going to be a lot of volume moving overseas. The big question, I think, is what's going to happen to those overseas markets when all that production gets there.
But I know that India needs some. Sharif told me India, China needs it, that there'll be room.
There'll be room. The question is room for how much, at what price?
Okay. Right. That matters.
And that matters.
Iran is such a big producer. I can't even fathom the idea that people are talking about the potential war with Iran and oil doesn't go up.
Well, you've got to remember that a lot of people thought that oil was going to go up when Venezuela was going to hit the wall. Right. Gee, that didn't exactly happen that way, did it? And so, when you look at how much resilience that there is built into the marketplace, I think most of the market assumes that if prices go up, the U.S. and other countries will respond. It may take a little time, so prices might spike in the short term, but not the long term. That's what we've talked about before. That forward curve still is on the downhill slide.
One last question. A great friend of the show recently passed away, Boone Pickens. Legacy of the man?
He's incredible. I mean, he was a wildcatter back in the days when wildcatter meant that you would drill a well and it was either going to be a gusher or it was going to be a dry hole, and you had to have the risk tolerance to be able to handle that. He took his success in doing that and then continued to be on the front end of the curve, getting into wind energy before it was cool, getting into natural gas vehicles before it was cool, sometimes maybe bleeding edge, but nevertheless, he'll certainly be missed by the whole industry.
Now, you say wind. I mean, one of the things that's clearly happened, conservation. I talk to companies and they're telling energy companies, listen, utilities, we want more plants in order to offset, we want more wind to offset our own use of the environment. I mean, this thing is real.
It's real.
You told me, you sent me to a fellow, Kyle, he said, listen, light bulbs themselves.
Yep. So alternate energy, renewable energy is real. It's making a significant dent. It's certainly making a huge dent in the California market right now, and it's changing up the market. The market is going to be reacting to this as long as you and I are going to be caring about this.
It is hard for me to believe it. A lot of it seems to be happening without Trump, right?
I think that's true. You know, the Trump administration has a lot of initiatives that are going on that maybe or maybe not will have any kind of impact on the market in the short term. But the main thing is the Trump administration has not done anything to hold the market back.
Right.
So we're getting pipelines approved. We're building new LNG export terminals. Producers are still drilling and completing wells. As long as that's happening, I think most of producers are looking at that as a win in Washington.
Wow. Well, I got to tell you, you've been right this rain the whole way. Always telling me no more big spikes, no more $100 moves. That's Rusty Braziel. He's the president and principal energy markets consultant for RBN Energy, rbnenergy.com. I think he's the most must-read. It's by 6:10 each morning. And, boy, he's got some great stuff about music, too, if you care about it. Man, buddy's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.